How's it going, everybody? Welcome to a Capital Hungry live New York market update. It is currently Thursday, early afternoon, 11:45 a.m. Eastern. Already have passed New York Stock Exchange open as well as London close, and primarily gone through most of the New York volume. This is going to be a market update webinar looking at some fundamental events that are active and impacting the financial markets in real time, any economic data reports that we have potentially through Asian session and on Friday to close the week off, and some trade ideas using some intraday analysis as well as price action, micro and macro fundamentals on gold, GBPJPY, GBPUSD, EURUSD, USDCAD, US30, and of course, as well as looking at our investor behavior and everything else. So we're just going to start off here by first looking at our trading reminders, right? As traders, it's always good to stay emotionally neutral as possible. So here are just some quick trading reminders on your screen. This is not a live price action or trading session stream. This is just a quick market update. Might be around 30 minutes to an hour long, similar to the last Asian market update, where we just review what's going on and map out some trade ideas to close off the week, right? So the same recent fundamental points are still very much active. Our global equity markets across the world in various regions are extremely bullish. US 30 has continued to print new highs day after day. Our safe haven currencies are still fundamentally weak from a higher time frame macro perspective, and even the US dollar now, after those Jerome Powell comments and initial upside move, is starting to fade out some of that strength and starting to weaken. That $1.9 trillion stimulus has been passed for the US, even though a lot of that has been priced in. That has been some recent news in mainstream media, and the main fundamental focus for the financial markets we have been watching in the currency markets or the equity markets has still been around vaccine rollouts and global COVID control. All right. Now, we didn't have too much data through New York session, and we don't have anything through Asian session tonight. To close the week off, though, overnight through London and Euro session Friday at 2 a.m. Eastern, we have a flurry of UK economic data, which is primarily focused on the monthly, quarterly, and yearly GDP figures, as well as the monthly 3-month change of the GDP figures. Followed by, at 8:30 a.m. Eastern, the US Producer Price Index, and then followed by the Canada unemployment change. There is the US federal budget, which is tentative to close off Friday as well. So we don't have too much economic data to focus on through Asian session or anything else impacting through North American session itself. But when we are looking at mapping out some of our GBP trades, we do want to keep in mind that UK GDP data that will be obviously happening right at pre-London hours, okay? Now, let's start off here with gold. As you guys know, and if you've been following along the previous live streams and you have been following along the market update webinar from Asian, we have been calling the gold exhaustion from the 1680 lows, as we've been identifying a break in bearish market structure as well as more buyers momentum entering the market, right? So you can see primarily our higher time frame historical key levels have been used as a support, and we have broken out of that bearish market structure, showing a lot more buyers momentum with still a lot of potential to squeeze up into the 1760s area. Now, at the 1739 new intraday highs created, we have had a pullback phase now. What I want you guys to look at is from this initial bottom all the way up to 1739 higher time frame key level, we had about a 570 pip upside. Now, if we can see from the 1739 high, where even if we got about a 280 pip, 250 pip correction down to 1715, we would still be only within a 50% correction range point to still have to still be maintaining bullish market structure to continue our way up. And I want to give you guys an example of this when we are looking at a previous macro low that was created on gold a couple of months ago, and how we had an initial strong upside move, a correction, and then a continuation up. So let's look at that here. And that correction on the intraday time frames ends up creating a more refined higher low and then getting more buyers in the market. So let's dissect when gold, obviously gold, when we zoom out here, we know that we've been playing in this overall corrective bearish structure as markets have been optimistic. But something we want to identify is at these macro low points, we have very aggressive buy bounces, especially when you can start to identify a break in the lower time frame bearish market structure. You have very aggressive corrective buy bounces in this area. So we're going to compare to this previous sell-off run and this bearish market structure that was respected for a period of a couple of weeks, where you can see from this peaked high point all the way down, you could run your bear structure, right? You have initial strong sellers impulsive plays, pullback, sellers impulsive plays, consolidation, seller impulsive plays, until this point at 1770, where you finally start to see stronger buyers impulsive candles and a shift in that structure, right? And you don't even get that shift in a structure till about 1800. But look at this, what I want you guys to look at. The upside move from these 1760 lows pretty much ran all the way up to 1870, okay? So this is what? This is a 1,000 pip move, $100 an ounce, right? We go to peak a previous price sensitivity area, and then we start to notice a pullback. The pullback goes from 1870 till about 1820. A 500 pip correction, right? So you have a 1,000 pip upside move and a 500 pip correction, which is what? A 50% correction compared to the size of the impulsive upside move that broke bearish market structure. What this ends up doing is creating a more refined higher low and pushing price down to a more favorable demand area. So we have buyers jump back in, and then you can see we continue to respect this bullish market structure all the way up till 1950. We have this stronger intraday bullish market structure respected for a month, right? So what we have been taking advantage of on gold is the initial signs of sellers exhaustion at a higher time frame key level, new intraday lows created, and that potential break of bearish market structure, right? So we've had a very strong upside buy move from about 1670, 1680, all the way to 1740. So now that we have this upside move from the 1680 lows all the way to break above previous intraday highs and minor intraday highs, and to extend this move 500 pips. This upside move was a 500 pip upside move, essentially. You can say from 1680, 600 pips, we'll say 500 to 600 pips, okay? What I'm trying to share is for us to get a 50% correction of this upside move and get a pullback, let's just say to like 1710, even around 1700 again, and still maintain the and still fail to break lower than that 50% correction point, we can easily see buyers re-enter the market from that point and then continue our way up. All right. So now what we want to identify as traders is where can we get these potential pullbacks. So I won't see that potential for that deeper pullback unless we come below 1721 and our higher time frame key levels. Like obviously if we come below and break below the key levels, we have higher potential for that pullback down to about 1710. And if we fail to break and create a flat candle body support in that area, that would be a great buy area on the higher time frames to continue back to these highs and go to new highs, just like we were looking at to the left but in a smaller scale now. Sorry about that. So just like we were looking at here, right? Instead of having a 500 pip upside move, here gold did about 1,000 pip upside move in a week, and then had about a 500 pip correction. Right? So here we can see something very similar. Breaking out of that bearish market structure, having this impulsive buy side move to break above those previous intraday highs and above that bearish market structure, right? So even if we get a bit of a deeper pullback here to that 50% correction point and we still don't break, there's a lot of potential for that buy side move to continue right back up and creating more refined bullish market structure. So does that make sense to everybody just by looking at the price positioning, by looking at the new intraday high that was peaked on gold, by looking at the impulsive moves versus corrective moves, and by comparing to what happened previously after gold sellers created an impulsive low and we had the breakout of structure? So now when we're coming to our hourly time frame, we can obviously see the rejection we had right at our 1739 key level in exhaustion. Okay, so what I'd be looking for on gold is a few things. Right now, even this area is a potentially good buy area. So on what I'm primarily looking for over the next 5 hours is, the first thing I'm looking for is, will we maintain price above 1721, which you can see all this liquidity. What the hell is that? Which you can see all this liquidity to the left here in the previous lows remaining above that little zone. See this order block, this price consolidation zone where we previously rejected here, the previous low points. So this is a very significant area around 1721. If we, over the next 5 hours, hold above 1721, then the new daily candle comes to retest 1721 and fails to break, and we create a flat candle body support here. This is also a good buy area back to 1739. But over the next couple of hours until markets close, as you're watching price action, it's not good to take any trades during these late session hours, but as you're watching price action, if we start to close back below that range, then there is higher probability I could see for the new daily candle creating a bit of a deeper wick and then giving us that deeper pullback. So this 1721 area is a critical area I'm watching. It's a very good buy area in my opinion if we don't break below it over the next 5 hours and through the next new daily candle. All right, so this is what I'm talking about. So look, if this new daily, and it makes a big difference of how this daily candle's closing. If this new 1721's right here, if this new daily candle still closes as is above 1721, that's not showing you seller's pressure. That's not showing you a massive sell-off. That's a fairly weak bearish candle close, and just having that pullback where the next daily candle can quickly also make that lower wick around 1721 and then end up flipping bullish, right? But if over the next 5 hours this daily candle ends up closing bearish below 1721 and matching the body size of this previous daily candle, that shows more seller's pressure for a potential deeper pullback to like 1700, 1710, and then potential continuation up. But the buyer's price action over the last couple of days so far has been good, and those buys have been great. Have you guys been able to ride those buys up since the Asian market update and the previous live London session? Right? We had the buys from like all the way from 1680, 1698, 1707, 1715, 1727. It's gonna form a head and shoulders and rape retailers. Damn, bro, you really be trading head and shoulders patterns and shit like that in financial markets, eh? You be trading real world financial markets looking for a head and two shoulders to be formed. Evaluate yourself. But anyways, all right. So now look, we had this aggressive pullback to 1721, but we're trying to create a flat candle body support in this area. If you guys were looking at some of these trades I just took, that was based off these 1721 bounces here, off the higher time frame key level, right? I missed the sells. I missed the sells personally, and I was sleeping to take the buys up yesterday, and I had some personal family shit going on. But as we came down to that 1721 key level and failed to break, I took some scalps for 50 pips, because it's just right now, over the last couple of hours, we've just primarily been ranging between 1721 and 1726, like a 50 pip range, you know? So anyways, that's what I'm looking for over the next 5 hours, is are we going to remain above 1721? If that daily candle can close above 1721 and the new daily candle can push down to create a lower wick and fail to break, this is a great buy area. You know? Otherwise, if the daily candle closes below 1721, I see higher potential for the new daily candle to continue down and go deeper, you know? I don't know. I don't read random comments that deeply. You guys are here to watch me. I'm not here to read about you. So that's what I'm looking for on these key levels on gold or GJ. The white levels, no matter what pair it is, are based on yearly, quarterly, and 1 month candle body conjunction price points. Higher time frame historical price points. All right. So those are based on historical price points. How they're exactly mapped, that's a personal secret of mine, because I have did that through my own personal back testing. You know what I mean? Yeah, you were mad on the inside because you're wrong. Wrong about what? The fuck you talking about? Are you okay, bro? So anyways, that's what we're looking at on gold. Key area 1721 to watch if the daily candle closes around above here, and then see how the new daily candle sets up, right? I'm only seeing a deeper pullback on gold if we break below 1721. Now let's go to GJ. GJ, come on guys, how beautiful has this been? What do we know? Fundamentally, that our safe haven currencies and our fear and greed indicator, such as the volatility index, US dollar, Japanese yen, are primarily bearish. Money is coming out of the safe haven currencies and they are going into the risk currencies, right? So when we have money coming out of our safe haven currencies, fundamentally, because markets are more optimistic, investor confidence is a lot higher, you also can notice the global stock market's extremely bullish. US markets printing new highs, German markets at highs, Japanese markets at highs. You can see the market optimism being reflected in the global financial markets overall, right? So there has been zero reason to sell GJ. We've only had pullback phases. We've only had these pullback phases with either highs being created and minor pullbacks. Like same thing we had at the end of the month there, where we continued back into new highs. So there's no real reason to sell GJ or be in a seller's bias on GJ, unless you're just trying to be a hero and call a top. But fundamentally, with the smart money movement of money going out of the safe haven currencies and stand alone, the Japanese yen being so weak, and money going pooling into our risk currencies, because it doesn't matter if you're looking at GJ or if we want to look at NZD-JPY right now, or if you want to look at AUD-JPY right now, or if you want to look at CAD-JPY right now. Smart money is moving through the economy, or smart money, sorry, is moving through the markets, not the economy. Smart money is moving through the financial markets in that same pattern throughout every risk currency or safe haven currency. So there is no real reason to sell GJ or to sell any pair against the Japanese yen as long as markets stay fundamentally optimistic, right? The only thing we have to be iffy about is, yeah, to sell GJ because you saw a bearish daily candle is very stupid, but that's okay. We're here to learn. The only thing that I would like is if beforehand for the new daily candle, if we could get a pullback to retest these previous highs around 150.5. Now, that would be pretty aggressive, but that would be a great retest for the new daily candle lower wick, and then overnight to get a positive GDP data to continuous right back bullish. But will we get that aggressive pullback? I doubt it, because this lower time frame bullish market structure is still being respected. All right, so now let's look at this. Shut up, Vlad, with your fake Jerome Powell account. All right, so now when we're looking at the structure and we zoom out and we go back to the lower time frame here, we haven't had any breaks of this lower time frame bullish market structure since creating these intraday lows at 147.5. You can look at the lower time frame and see the respect to this bullish market structure, right? No, bro, but I can't expose how much you depend on Capital Hungry. You know what I mean? So, wrong person to test. You know what I mean? Don't talk shit to the hand that feeds you. Never mind biting it. Don't even talk bad to it. So anyways, GJ, we're at new highs created. 151.600. We probably won't get that aggressive of a pullback, but for the new daily candle, even if we come down and break below 151.5 and come to 151.200 and still maintain that overall bullish market structure, great buy area. All right, we would be, the buy options for GJ are pullback buys at 151.2. If you don't feel confident taking the buys at the pullback, wait for that pullback, support formed, and then break above previous highs again. I would only be looking for corrective GJ sells if we finally break below this intraday bullish market structure that's been respected for almost like how long now. So we have no reason. This has been respected for 2 weeks now, this bullish market structure. We have no reason to sell GJ unless we were to break below 151.200. Do you understand what I'm saying? If we can identify exhaustion at the highs and then have a seller's impulsive move that breaks below the bullish structure, then we can have a continuation to the downside and get a deeper pullback. But there's no reason to fight this bullish market structure as continuous highs are being printed by buyers. So what we're looking for is a pullback and continuation up, or a consolidation zone and continuation up to new highs. Understood? So 0.200 area is a great pullback buy area I'm watching, and I would only be looking for corrective pullback sells if we were to break below there. So gold, we understand what we're looking for, still bouncing and reacting to 1721. GJ, we're still in that buyer's bias, looking for pullbacks to 151.200, failure to break and continuation to the upside, or only safe sells below that point. GU, Now, it's always good to review GU after GJ because British pound is the same primary in the quote. And the secondary in the quote is still a safe haven currency, which is the US dollar. The US dollar has had more short-term strength than the Japanese yen. So you can see here when GJ had buyers exit positions at these highs from 150.5 new highs created at the end of February. You had this pullback phase that created this short-term bearish market structure where we didn't break the bullish structure, and once you broke above there, you went to retest previous highs and create new highs right now, right? GU is just lagging a bit behind, but I see the same potential, right? You can see that at the end of February, we had buyers exit positions at new highs. But what was different compared to GBPJPY and GBPUSD was that the US dollar was holding more short-term strength just to start off the new month compared to the Japanese yen. This is the dollar standalone, and this is the Japanese yen standalone. You can see the dollar had more of a cap bounce towards the start of March to create that monthly upper wick, and now it's starting to finally turn bearish and follow the higher time frame bearish structure, where the Japanese yen has been bearish and still respecting bearish price action and structure. So GU has essentially just been lagging behind, where that sell-off move, did that sell-off move break bullish market structure? Did it even break previous highs? Right? No, it did not. So when you zoom back in here, you can see that we had this corrective bearish structure being respected until we came down to our 1.38 higher time frame key level, where now we're starting to create more refined bullish market structure. You can see we're at an area of price sensitivity here, but as long as we can come down to 1.39 again or break above this liquidity zone, I still see continued buys to these previous highs. So then we're going to look at that alongside our key levels. So I am sort of just seeing GU playing in this little bit of a bullish channel in the lower time frames. And that is why in the Capital Hungry private channel, we have been shifting into a buyer's bias. You can see that we had bearish market structure being respected all the way until we reached around these 1.38 low points. Then we finally started to create a flat candle body support and notice exhaustion by sellers and buyers starting to jump into the market and also break out of that bearish market structure here. Once you broke out of that bearish market structure, we extended to print a new intraday high and have been continuing to print new intraday highs, right? So as long as the new daily candle on GU, if it pulls back to 1.392, I'm still looking for continued buys. Or I'm looking for continued buys now above 1.40 flat on GBPUSD. If you want to look at the higher time frames on GU are still very bullish. Like on the higher time frames on GU, we're still well above that bearish market structure. We're just reacting at these previous historical highs. We're still respecting higher time frame bullish market structure like I'm showing you guys on the daily and on the 4 hour. So higher time frame still very bullish. This is more of an intraday market update webinar, just looking at the intraday time frames, you know? So as long as we get a pullback on GU, even to 1.392 again, I would be looking for buys from this point for the new daily candle. Or if we can finally break above this price sensitivity area at 1.4, then we're looking, and what I'm looking to target is back to those previous highs in the higher time frame, because we're just trending bullish. And I'm just looking to do the same thing GJ did about revisiting those previous highs and continuing even higher, right? Maybe we might not revisit those previous highs until next week, because we are coming towards the end of the week. Maybe the next weekly candle will give us a deeper pullback around this area again, then continue up. But for an intraday trade over Asian session, London session, in New York to close the week, I do see those continued trading opportunities. So does that make sense so far about gold, GJ, and GU trade ideas and analysis? All right. And then obviously keep in mind again, these fundamental points that are still active, that are just popping up on your screen right now, that we've already reviewed at the start of the webinar. And then these are the economic events. We don't have any economic events or data reports through Asian session, and we have only those economic events on your screen through London session. Primarily the UK GDP is in focus. If that's going to be continued good data, we'll have more reasons to continue buying GJ. If it's poor, maybe that could give us our pullback to continue back up. All right. For anybody who's asking about, hey Jeev, how do you take entries? Hey Jeev, this is only a market update webinar for trade ideas and like a live news update, reviewing what's going on in the markets and reviewing what can come. All right. If you want to know how I take entries, if you want to know how I view trading psychology, how I view fundamentals of the market, how I view technicals, lower time frame to higher time frame, please stop being a lazy piece of useless shit and go watch all these webinars. All right. We usually do our live trading sessions at London. Those are 4 hours long. All right. Where like we'll take the trades with the live chat and stuff like that. I already made a quick 3,000 just off some gold scalps. I was done for the day with that. You know what I mean? This is just a live market update webinar. So please, guys, understand all the resources that are available at your fingertips. Look at these dozens and dozens of webinars. You have full 4-hour live trading sessions, right? You have these market update webinars that I'm starting to do, like the one I did at Asian session. This Asian session market update, 38 minutes long, called the gold buys for free from 1680, then at 1700, then at 1710. You know what I mean? So I can give you guys all the information, I can give you guys all the tools, but you have to put in the effort yourself. So you have previous live recorded sessions. You have higher time frame breakdowns on pairs. You have educational webinars. You have trading psychology webinars, fundamental webinars, technical webinars. You have the Capital Hungry news Twitter feed itself. It doesn't post as many headlines as the news terminal. That's just for private members. But this is still a great free resource that's better than Forex Factory, better than investing.com for news headlines, right? You have the Capital Hungry Telegram analysis channel itself, which has been posting analysis, webinars, and trading content news for a 1.5 years for free now. All right. If you want to learn more than that and you want more in-depth direct teaching and content, then you have to join the private channel, because my time, my value, and my effort, it does have a monetary value associated to it. Everybody's value has everybody's time has value. So I do all this shit for free, but I do have shit that I do that people pay for as well. That's even more in-depth than this. And you have to ask yourself, if I can post all of this information for free, if I can post all of this content for free, but still have people paying me for a private service, what's in that private service? Most of the people that pay month after month, you have to remember, they're choosing to stay every 30 days. It's not like those trading groups where somebody pays $1,000 and then they get stuck in a trading group and then they just end up being in the chat. They paid the amount, they didn't get their value, they just end up getting stuck in a chat. You have to understand, every month, these individuals in Capital Hungry make the decision themselves to stay another 30 days. So what's that tell you about the consistency of the content, the consistency of the service? Nobody's paying me $1,500 and being stuck. Every month they're paying $100. They choose to stay month after month. And I've kept a consistent 200 members at the low month after month. So please, I'm not trying to brag to you guys. I'm not trying to show off. I'm just trying to show you guys that please put the time and effort in, because all this is here. The Capital Hungry private channel, if you want to know how that works, watch this introduction video. In the private channel, we do weekly recap and refresher webinars. We do market update webinars, weekly economic events reports, weekly news breakdowns, trade ideas, Zoom sessions. There's way too much for me to even talk about what we do in the private channel. There's, on top of all these educational webinars, in the private channel, there's 50 more educational webinars that aren't on YouTube. So yeah, just put that time and effort in yourself, guys. You know what I mean? This is just a market update webinar. But anyways, does that make sense for gold, GJ, and GU so far? So I can go on to EURUSD. I don't want to make these webinars too long. I want to make these live sessions short and sweet. Whoever comes and watches it live, that's great, but I want to make it so anybody can quickly watch it after it's saved. They can watch the 30-40 minute webinar and then like potentially take trades from the analysis we're giving here. So I don't want to make this webinar too long. Let's go to EURUSD now, all right? Now, EURUSD, same idea. What do we have here? We have a risk currency against a safe haven pair. So fundamentally, ever since the COVID crash, this pair has been bullish. We've only had these consolidation phases and breakouts to the upside. And continuations up. All right? So we don't have to go to the weekly time frame. We don't have to go to the daily. We can clearly see that even though EU has had an aggressive sell-off move from... Okay, so let's dissect this. EU has had an aggressive sell-off move, correct? A lot of people might say EU starting to turn bearish on the higher time frames. I'm not one of those people, because that sell-off move is coming from a new high. New highs were printed, then we had this pullback that went to retest where? Previous highs. We retested those previous highs and have failed to break lower so far. Okay? You can also see that we were having some lower time frame bearish market structure that I'm going to show you guys, and similar to which you can better see on like the 30-minute time frame, and you can better see it like on the lower time frame on the 1 minute. So first of all, 1.184 is already a historical higher time frame key level. Okay, so we had this massive sell-off move come right to 1.184 and fail to break. This area at 1.184 also happens to be previous highs that were created when we're looking to the left on the 4-hour or the daily time frame. All right, from this price point, we had a pretty aggressive upside buy move that broke above previous intraday highs and broke above the bearish market structure. We already had a pretty aggressive pullback to 1.92, and buyers re-enter the market now with potential to continue still to the upside. All right. So what I am looking at on EU for the intraday trades for the potential new daily are two things. One, if we come back below 1.196, I see another potential pullback in daily lower wick formed at 1.92 and continued buys to the upside. Two, if we just range in this area, I see safer buys above 1.199, which was previous intraday lows you could see here. Okay, so fundamentally, markets are still optimistic, meaning equity and liquidity is coming out of our safe haven currency. So for now, the US dollar has been weak. As long as the US dollar and as long as the Japanese yen remain weak through the new daily candle and through overnight, our GBPUSD, EURUSD, and GJPY bias is still very much valid, as well as a potential gold buy bias as well, because it's gold against the US dollar that we trade. Okay, so just giving that tip that while you guys are looking for those potential EURUSD, GBPUSD setups, keep an eye on the dollar index standalone on like the 30-minute time frame, just looking at the intraday price action. Because when you're looking at the intraday price action on the dollar, as long as it still keeps moving in this fashion, as long as the dollar standalone keeps moving in this fashion, like trending bearish, it gives you more confidence to take those GU and EURUSD buys with price action confirms on that pair. Does that make sense? So watch the dollar overnight and watch the Japanese yen movement. That's closing in like another few hours, but just watch the movement of your safe haven currency standalone and then your global stock markets as well. Because if you have both the US dollar going bearish and your stock market still continuing bullish, you know fundamentally it gives you more confidence to keep taking GJ buys, to keep taking GU buys, to scale in more EURUSD buys with the price action confirms on this pair as well. All right, so primarily EURUSD, GBPUSD, GBPJPY in a buy bias, looking for pullbacks to retest the structure point stated and continuations up, or breaks above key level continuations up. Okay? Makes sense, everybody? Makes sense? Now, this is great to reflect because now we're going to be looking at US dollar against the Canadian dollar, which is the inverse. Now you have your safe haven currency against your risk currency. We were already calling the sells below 1.258. We're trying to take it 80 pips down, but so far for the key level, we've ran down about 30 pips today from the intraday time frames. But now we have here US dollar against the Canadian dollar. You can see it's the inverse. Our safe haven currency is first and our risk currency is second. So instead of having higher time frame bullish market structure being respected since March 2020, we have had bearish market structure being respected. We've had only pullbacks, continuations to new lows, pullbacks, continuations to new lows. So I'm looking for UCAD to target these previous lows at 1.245. I have no reason to buy the US dollar against the Canadian dollar for multiple reasons. One, overall markets are still optimistic, which means we're printing bearish market structure on our safe haven currency against risk currency pair. Two, the US dollar standalone is showing us short-term bears and bearish price action. Three, the Canadian dollar is holding strength based on market optimism and because of oil. Oil is extremely bullish because of the market optimism and the increased demand in oil consumption as economies are opening up again. One of Canada's main revenue sources and one of Canada's main economic drivers is the exporting of crude oil. When crude oil is extremely bullish, this is a positive bullish correlation to the Canadian dollar. Okay? And obviously the inverse, when oil is extremely weak and bearish, this is a negative for the Canadian dollar because less revenue, less profits being made on oil exporting. And obviously when oil's at $60 a barrel, more profit is being earned on oil exports. All right? So, US dollar CAD, as long as oil stays bullish and the US dollar stays bearish, for the new daily candle, I'm looking for a retest of 1.258 and continued sells down. These sells below the key level have already been missed. That was sent to the private chat last night. That was sent to the private chat yesterday at 3 p.m. to patiently wait for those confirms there. But yeah, I am in a USDCAD sell bias, still respecting bearish structure, looking for retests at 258 on the new daily candle, and looking to take sells to revisit these previous lows at 25 flat. Okay? And then, of course, the beast that is US 30. Which has just been, ever since that 3,500 buy area, it has just been going crazy bullish, eh? Ever since Jerome Powell caused that dip in the markets, it's just been bullish since that point. So what I'm simply looking for is, I don't want to buy at the highs. I'm looking for a retest of the previous highs created and a continuation up. Okay? So that is the intraday analysis and the trade idea analysis for gold, GJ, GBPUSD, EURUSD, USDCAD, and of course US 30, while also looking at investor behavior and scanning information and the market structure on global stock markets, still showing us investor confidence and bullish confluences, by also looking at how our volatility index, which is the fear and greed reader of North American markets, very bearish, back to historical lows. Japanese yen, very bearish, safe haven currency. US dollar, very bearish, safe haven currency, right? Our fundamental points of these macro fundamental points still very much active. Our economic events overnight and what we have to close off Friday shared on your screen there. Right? Don't forget your mental reminders as a trader to stay alert and focused. Follow some sticky note reminders at your trading area. Trade at a specific time and environment. Don't trade while you're driving. Don't be trading every single day, every single session. You know what I mean? Trade in an environment where you can be calm, cool, and collected. Don't force trades in an area where you're distracted. No matter how well you know your trading plan, physically print it out. Repeat it every day. Go through these repetitions like a workout. Do some stretches or deep breathing, or have a routine that you follow before you enter any trade, so you have some mental preparation that you follow. Focus on your long-term vision rather than short-term impulsive desires. Have another person you can relate to or reflect and share ideas, losses, wins with. Never have any FOMO in the markets. Understand the market is always here, but your capital may not be. All right. So yeah, just watch markets now objectively and see how these daily candles close over the next 4 hours. Before I close this off, let's just read some of the headlines since 8 a.m. that we've had impact New York session. I'm just going to quickly scan through them and see what we've had over the last couple of hours at least. We'll just go from NYSE timestamps forward. This news terminal is for the private members only. It sends headlines on economic data like nonstop, fundamentals, economic data, whatever it may be. All right, since NYSE, COVID Public Health England says the new variant designated a VUI on March 4th after 2 cases were found. COVID Public Health England says only one new variant case. Nobody cares about that. UK Finance Minister Sunak, UK side says constantly kept up at night by the worry about the labor market. Nobody gives a shit because GJ's bullish. This guy's trying to give us a pullback on GJ. Texas Public Utility Chairman says legislators he would be sued. Nothing important there. US jolts job opening data. More job openings are being created, giving us more market optimism that helps support US equities bulls today. France hopes to reach an agreement with Brussels in the next few weeks of reconstructing EDF and nuclear sector reforms. So we might be seeing some more Brexit-related talks between European Union and, of course, France, Paris, and the EU over all this climate control, nuclear power bullshit. But we'll see if that brings any more talks regarding Brexit as well. Christie says digital-only artwork by an American artist sold for an auction for $70 million. Wow. You guys been hearing about this new NFT shit, right? The digital art thing. So a new digital-only artwork by American artist Beeple. Who the fuck is Beep? This is so bullshit. $70 million for some Photoshop bullshit. Some fucking Microsoft Paint shit. You know what I mean? Probably some bullshit that looks like some abstract nothing, I bet. But anyways, $70 million it's sold for. Democratic U.S. Senator Manchin to vote in, confirm HSS Secretary. U.S. sanctions from 2 individuals from Burma. Doesn't matter. Please disregard the latest news alerts on the U.S. Myanmar sanctions. All right, we already did. Biden nominates Look at this. Biden nominates former Fed economist. So someone's going from the Federal Reserve Central Bank, having a job there at the central bank, to the U.S. government. Even though they're not connected, it's just corruption. You know what I mean? Yeah, we should start painting instead. I should start selling my charts for more. ECB, okay, EU Commission gives final approval to Johnson & Johnson vaccine, which is obviously an optimistic sentiment there. Final approval for the Johnson & Johnson vaccine. That was at 10:30 a.m. Eastern, just about 2 hours ago. AstraZeneca still having some issues with their vaccine. The European Commission says granted conditional marketing authorization for the vaccine developed by Janssen Pharmaceutica. Still reviewing. Vaccine talks are still accelerating. Vaccine distribution and approval still accelerating. That's a positive. COVID, UK reports 23 million people have received their first dose of vaccine, so continued vaccinations are a positive. They're not a continued vaccination. Listen, I'm not a supporter for vaccinations. I'm just talking about a positive impact on financial markets from an investor standpoint. I'm not saying, hey guys, go take a vaccine. Fuck the vaccines. They'll probably stop you from having babies or something. You know what I mean? But I'm just reading the headlines saying that these are still optimistic comments about more people being vaccinated, vaccines being approved. Moderna executive says expects to have data from the study of the third booster shot. So Moderna still accelerating their vaccine studying. Other than that, we have some Denmark balance, the Myanmar sanctions, UN sanctions on Myanmar. Am I pronouncing that right? Other than that, not too much else going on. Market's still optimistic. Fitch says the pandemic-driven shifts to the US labor market have intensified. A long-entrenched K-shaped economy. Pfizer CEO says companies to make vaccine doses available at cost to low-income countries. So providing vaccines to any economic status. Pfizer CEO says remaining 60 million doses for the US in March already manufactured. So now they're just quality testing, but the Pfizer doses are ready in the US. They're manufactured 60 million doses. They just need to be quality controlled. Household spending heavily increasing. Household checking accounts, $3.2 trillion increase from Q4 to Q3, previously 2020. Stock market gains add 4.9 trillion to the US household net worth. Real estate added 900 billion. Crazy. Very interesting. That's about it here. French health minister, every 12 minutes a new COVID patient is admitted into ICU units. They're trying to bring some short-term fear, but it's not doing much. All right, everybody, that's it. Those are some of the main headlines. Though that is the intraday market update webinar. Trade ideas shared on gold, GJ, GBPUSD, EURUSD, USDCAD, US30, dollar index, and not dollar index, but so we reviewed some macro fundamentals. We reviewed what economic events we've had so far throughout the day and what we have overnight. We reviewed investor behavior. We reviewed some of the headlines over the last couple of hours and trade idea and analysis. I will see you guys next week. Take care, everybody.